Hello and welcome to My Finance Teacher. Gold is still indecisive for the last several days. We are still around the price level of 1320, and just as we mentioned in the previous video, there is a possibility that gold might move down over the next week or couple of weeks. I don't expect a significant pullback. It will probably meet the 20-day moving average that is rising to meet the price. And in addition to that, there is a support zone around this sort of a price level, around 300 or so. So not much change over the last several days. And just as we mentioned in the previous video as well, dollar is trying to bounce up a little bit. There is still a chance it might go higher. However, over the last couple of days, it's not really getting any traction in its move upwards. But this move might still continue for another several days or a week or two before dollar rolls over and continues its downward movement. So just the opposite is expected for gold. Probably it will continue down for just another several days, a week or two, and then move upwards. However, this 1320, that is sort of a resistance zone at the moment. Gold is churning just at that resistance level, and the longer it stays at this resistance level, the more the strength of that resistance disappears. And there is a possibility now that gold is going to churn around somewhere close to that 1320, and in that way the 20-day moving average will catch up with the price and will continue up from there. Then it will be a question whether we are going to count that as a daily cycle, or we'll have to count something else as a daily cycle. Nevertheless, on one hand, there's a chance for gold to pull back down, not that much. There is also a chance for gold to sort of show some volatility close to 1320, wait for the 20-day moving average to catch up with the price, and then continue this advancing phase of the intermediate cycle. And this intermediate cycle will top, I guess, somewhere close to 1400, because generally gold has been stuck in this range between 1200 and 1350 or so, 1360, for already quite a while after showing this what appears to be a final bottom after the bear market since 2011, close to 1050. So it appears that we have already put the bottom here. We're not going to go anywhere lower than that, and generally the trend is going to be upwards in the long term. However, we don't really observe much of this trend upwards, since the price is stuck between this 1200 and 1350 or so. I think the consolidation has had enough time to take place, and we should have expected a consolidation, because this move from 1050 to about 1335, that is a significant percentage move. So say 1335 divided by 1050, that gives me about 27% move in the price of gold in only about half a year or so. And this percentage move was even further amplified if we look at the gold miners. They increased by 2.5 times or so within this half a year, within that period of time. So one would expect some consolidation, and we've been stuck in this trading range. However, I think we've had enough of the consolidation, and that is why I expect gold to break out above 1360 and go to the next big round number close to 1400 before this intermediate cycle tops. So that I expect sometime in March or so. After that, of course, we need to have a correction of this intermediate cycle. It's early to say where the correction will finish. We might pull back down even all the way to 1320, and after that, enter a new intermediate cycle. Plus, we'll be in summertime, and usually summer is not really that nice in relation to gold price. So we might see a correction a little further, probably to 1300, but we'll have to look at that. We'll have to cross that bridge later. And another thing I want to talk about is what to expect with gold price in the longer term. So here is a monthly chart of gold price with a 20-month moving average. And since 2011, we've been in this bear market where the price dropped by 50% or so. The price dropped by half, which is a significant percentage. And this bear market, I think, finished in the end of 2015. One indication that this move downwards finished and is not going to continue. One indication of that is that we're now staying above this 20-month moving average. As you see, in the past, there was a bear market since there was a bull market in gold since early 2000s, all the way until 2011, 2012, something like that. And during that time, price stayed above this 20-month moving average. During the bear market, it mostly stayed under the 20-month moving average, and a similar pattern was observed earlier. If we look at the period between early 90s and early 2000s, gold has also lost quite a lot, also close to a half. The price dropped from about 400 to 250. That's nearly a 50% drop as well in that bear market. This time we've lost almost full 50% as well. So if history tends to repeat itself, then this bear market has finished with the gold losing half of its price, and we are moving upwards. We're staying above this 20-month moving average, and that is looking nice going into the future. If we are finished with this bear market, and if gold is going to go upwards in the longer term, then well, what are the possibilities? I'm pretty sure we're going to break this all-time high at 1900, and only time will tell how high we are going to go. It's quite likely that gold will go. It's definitely going to break this all-time high. It's possible gold goes to 3000 from here, taking into account the amounts of money that have been printed all over the world since the financial crisis of 2008, 2007, 2009. So that sometimes we have to keep in mind. This long-term perspective is something that we sometimes have to remind ourselves about when we experience some cool down periods in gold, especially when we're in the declining phase of an intermediate cycle. Good luck with your trades. Thank you for your attention.